So, ready to dive into the world of short-term trading? Today, we're going to unlock a powerful tool, the 5-day simple moving average.
What's fascinating is how something so simple can be so revealing about the markets.
Right. It's like a secret weapon for traders. But before we get into all that, let's break it down for our listener. Imagine trying to follow a stock's price throughout the day, up and down, like a roller coaster.
Well, the 5-day SMA, it's like drawing a line right through all that craziness.
Exactly. It smooths out all those little price swings, all those blips, and shows you what's really going on, the underlying trend. Like, it's the difference between getting bogged down in every single email and just focusing on the important messages.
Love that analogy. So how do we actually calculate this magic number?
It's all about averages, but with a twist. We're interested in the closing price of, let's say, a stock. Over the last 5 days, you add them up, divide by 5.
And that gives you the 5-day SMA for that day.
Yeah.
Exactly. So let's say a stock closes at $100 on day 1, $102 on day 2, $104 on day 3, dips to $103 on day 4, and then jumps to $155 on day 5. The 5-day SMA for day 5 would be $102.08.
Simple enough, right? But here's where it gets interesting, especially for our listener who's all about that 30-minute time frame.
Yes. Now we're getting granular. Instead of 5 daily closing prices, we're talking 65 closing prices over those 5 trading days, each day with those 13 30-minute intervals.
So it's like zooming in on the market, really getting into the nitty-gritty of those short-term trends.
Precisely. And this is where the real excitement begins for short-term traders. But before we go there, let's talk about why this number 5 is so important.
Yeah, why 5 days? What's so special about that?
Well, first off, it aligns perfectly with the trading week, Monday through Friday, capturing a full cycle of market activity.
Makes sense, like getting a feel for the market's rhythm.
Exactly. And historically, even before computers and all that, traders noticed these weekly patterns like clockwork. The 5-day SMA just gave them a way to, anticipate those short-term cycles.
Rooted in tradition and observation. Interesting. But how does this help us understand momentum?
Think of it like finding that balance between being too reactive and too slow. It's sensitive enough to pick up on those short-term shifts, but not so much that every little price wiggle throws it off.
Like a filter for your trading, cutting through the noise to the important stuff.
That's a great way to put it. It's about focusing on the bigger picture. The short-term trends, not getting lost in the weeds.
And that's key for our listener, making smart, strategic trades in the short term.
Absolutely. It's about spotting those opportunities that others might miss because they're too busy looking at the wrong things.
So a classic concept that's still relevant today. Now let's see how you can actually use it. And remember those 30-minute intervals. That's where the magic happens.
Exactly. In that time frame, the 5-day SMA becomes your guide. First things first, it helps you identify the trend. Is the price hanging out above the 5-day SMA? Could be an uptrend. Below, might be a downtrend.
So it's like instead of north and south, we're talking about like profits and losses.
You got it. And just like a compass helps you navigate, the 5-day SMA, it guides your decisions. Let's say the price has been chilling below the SMA, kind of hinting at a downtrend, right? And then boom, you see a break above that line. That's a buy signal right there.
So we're looking for those points where the price crosses the 5-day SMA. What happens if the price dips below the SMA when it's been in an uptrend? Is that like a sell signal?
Could be, yeah. Those crossovers, they're like little whispers hinting at a possible trend reversal. But, and this is important, we don't want to jump the gun based on one little whisper.
Right, like one weather forecast doesn't mean you cancel your whole weekend.
Exactly. We need more evidence. Is the volume high on that crossover? What are other indicators saying?
Like putting together a puzzle, finding those pieces that fit. Now, support and resistance. How does the 5-day SMA play into all of that?
Think of it like those key levels where the price seems to bounce off or get, rejected. The 5-day SMA, it acts as a dynamic support or resistance line.
Dynamic? What does that mean?
Well, unlike a fixed level, it moves, right? It's fluid. In an uptrend, it's like a floor, providing support. Price dips toward it, buyers jump in like, hey, a bargain.
It's like a safety net, keeping the price from falling too far. What about in a downtrend?
Opposite happens. It's a ceiling, resistance. Price goes up towards it, sellers take profits, pushes it back down.
Okay, so the 5-day SMA, it's like setting the boundaries for the price action. How do we use this in real-time trading?
The million-dollar question. And luckily, this source material gives a great example. Higher highs and the 5-day SMA.
Oh, yeah. Let's get practical.
Right. So picture this. You're watching a stock, it's been climbing, hits $50, pulls back a bit, then boom, new high is $52. Now it's flirting with $53. Meanwhile, the 5-day SMA, is also on the rise, sitting pretty at $51. What's going on?
Well, those higher highs, that's some serious bullish momentum. And the 5-day SMA going up confirms it, right? This trend is our friend.
See, you're getting it. But wait, there's more. The source material says, hey, zoom out to the daily chart. And what do we see? The 20-day SMA at $48, the 50-day at $45, and the 200-day at $40, all pointing up.
It's like a chorus of bullish signals.
Exactly. This isn't just some random upswing. It's a trend with legs.
Okay, so higher highs. 5-day SMA on the rise. Long-term SMA is confirming. Let's buy. What's next?
Hold on. Remember what we said about confirmation. Got to be patient.
Right, got to wait for the starting pistol.
We want to see that price close above $52. That's our green light. Tells us the higher high is the real deal.
Patience is key. Wait for that close above $52. But even then, we're not just like going in blind, right?
Never. Trading is all about managing risk. We enter smart, but we also got to know when to exit, just in case.
Stop loss order to the rescue, like a safety net. But where do we place it?
Okay, strategy time. Source material says place it a bit below either the most recent swing low or the 5-day SMA.
Swing low. Remind me what that is again.
Sure. Think of price movements like peaks and valleys. The swing low is that lowest point before it bounced back up on this recent climb.
The bottom of the valley before the next climb. Got it. So placing the stop loss below that, or the 5-day SMA, means we're basically saying, as long as the uptrend's strong, we're in, but if it breaks down, we're out.
Exactly. Protect the downside, maximize the upside.
This whole higher high strategy is pretty cool, like a multi-layered approach. Short-term momentum, confirmation, risk management.
It's a powerful combo, but gotta be real. There are limitations, things to watch out for.
No tool is perfect. Let's be honest with our listener. What are some of the 5-day SMA's quirks?
First up, it's a lagging indicator.
Lagging, like it's always running behind.
Kind of. It uses past data, like looking in the rearview mirror while driving.
Yeah.
Tells you where you've been, not necessarily where you're going.
So helps us see trends, but those trends are based on what's already happened.
Right. And that lag, it can be tricky in fast markets where things change quickly.
Like trying to catch a wave that's already gone by.
Love it. And speaking of getting caught off guard, let's talk about false signals.
Those are the worst, right? Getting tricked by the market.
Yep. False signals are those buy or sell signals that, well, they just don't pan out.
And they happen more in those volatile markets where the price is all over the place, I bet.
Exactly. The 5-day SMA, in those choppy markets, it can be like up and down, giving those mixed signals.
So how can our listener avoid getting fooled? I mean, experience helps, but any other advice?
Definitely. Experience is key. The more you use the 5-day SMA, the better you'll get at reading it.
Like anything, practice makes perfect.
Right. But a couple things. First, always look at the bigger picture. How's the overall market doing? That gives you context.
Like checking the weather before you go hiking. If a storm's coming, you don't just rely on a map.
Exactly. And that brings us to our second tip. Combine the 5-day SMA with other tools and indicators. Don't rely on it alone.
Having multiple perspectives, getting advice from different sources, what kind of indicators could we use with it?
Oh, tons. Momentum oscillators like the RSI, volume analysis, the list goes on.
So we're talking about a whole trading system, not just one tool.
Precisely. The 5-day SMA, it's just one piece of the puzzle.
Mm-hmm.
Powerful, but not a magic solution.
Like having a superpower, but using it responsibly.
I like that. We need to be smart, ethical, always learning and growing.
Well said. Okay, we've covered a lot. The basics, how to use it, even its limitations. But for our listener, what are the big takeaways here? So much to unpack. For our listener who's ready to jump into the trading game, what have we learned about this 5-day SMA?
We've seen how it helps us spot those trends, those buy and sell signals, even those support and resistance levels. But just as important, we talked about confirming those signals, managing risk, knowing its limits.
It's like giving our listener a whole new way to see the markets, right? Cut through the clutter, find those opportunities.
Exactly. That 5-day SMA, it's like your trusty compass in this world of trading.
But even the best compass needs a skilled captain. What's the most important advice for our listener as they start exploring all this?
Practice, practice, practice. The more you use the 5-day SMA, the more you'll understand those signals, those little hints it gives.
Like learning a new language, the more you use it, the more natural it becomes.
Spot on. And as you practice, always think about the bigger picture. What's the market doing? What are other indicators telling you? Don't just rely on the 5-day SMA alone.
Right. Build a whole trading strategy, not just one tool.
Exactly. And, we've talked about how powerful the 5-day SMA is by itself, but Imagine combining it with other indicators.
Now things are getting really interesting. It's like unlocking a whole new level of market secrets.
Absolutely. Think about pairing it with, say, the RSI, or bringing in volume analysis. There's so much you can do.
Endless possibilities. And hey, maybe that's a deep dive for another day.
For sure. But for now, remember, the 5-day SMA, it's a great tool, but it's not magic. Success in trading, it comes from knowledge, skill, being disciplined, and always being eager to learn more.
Couldn't have said it better myself. So, to our listener, enjoy the journey, keep exploring, keep learning. The trading world is full of opportunities, and with the 5-day SMA in your toolkit, you're well on your way to navigating those markets like a pro.